One of the key decisions you make when you select a mortgage is to choose how long your mortgage should be. The length of your mortgage is also known as your mortgage term. Lenders typically offer mortgages with 10, 15, 20, 25, 30, and 40-year terms, with the 30-year term being the most popular. So how do you decide what mortgage term is right for you? Understanding how mortgage term impacts what size mortgage you can afford, your monthly mortgage payment, and total interest expense over the life of your mortgage will help you select the term that is right for you. I'm going to discuss a few guiding principles about mortgage terms, and then I will walk through an example that illustrates these principles in action. First, the shorter the mortgage term, the lower the interest rate. A shorter term means less risk for the lenders providing you the loan, and less risk means a lower interest rate for you. However, the shorter the mortgage term also means the higher the monthly mortgage payment. So even though mortgages with a short term have lower interest rates, they have higher monthly mortgage payments because you're repaying the principal amount of the mortgage over a shorter period of time. The longer the mortgage term, the larger mortgage size you can afford. So let's say you can afford to spend a maximum of $3,000 a month on your mortgage payment. You will be able to afford a larger mortgage amount with a mortgage with a longer term than you could afford with a mortgage with a shorter term. The final rule is the longer the mortgage, the more interest expense you pay over the life of the mortgage. So even though your mortgage payment is higher with a mortgage with a shorter term, you pay much less in total interest expense over the life of the mortgage because you pay off your mortgage faster. Let's review an example that shows how these guidelines work. In this example, we have a borrower who wants a $300,000 mortgage, and we're going to look at mortgage terms of 10, 15, 20, and 30 years. First, let's look at the interest rate for each mortgage. So 3% for the 10-year mortgage, 3.25% for the 15-year mortgage, 4% for the 20-year mortgage, and 4.25% for the 30-year mortgage. So the shorter the mortgage term, the lower the interest rate. Next, let's look at the monthly mortgage payment for each mortgage. Remember, even though a mortgage with a shorter term has a lower interest rate, it has a higher monthly mortgage payment because you're paying back the mortgage over a shorter period of time. So we have a monthly payment of $2,900 for the 10-year mortgage, $2,110 for the 15-year mortgage, $1,820 for the 20-year mortgage, and $1,475 for the 30-year mortgage. This leads us to our final metric for comparison, total interest expense over the life of the mortgage. The shorter the mortgage term, the less interest you pay the lender over the life of the mortgage. For the 10-year mortgage, you pay approximately $48,000 in total interest. $80,000 for the 15-year mortgage, $136,000 for the 20-year mortgage, and $231,000 for the 30-year mortgage. So getting a mortgage with a shorter term can save you hundreds of thousands of dollars in interest expense over the life of the mortgage. Now that you have an understanding of how mortgage term impacts your interest rate, mortgage payment, and total interest expense, we can return to the question of what length of mortgage should you choose. The answer to that depends on your financial goals. If you're seeking to maximize your mortgage amount and minimize your mortgage payment, then you should go with a 30-year mortgage. If you can afford a higher monthly mortgage payment and want to save tens of thousands or even hundreds of thousands of dollars in interest expense over the life of your mortgage, then you should choose a shorter mortgage term, such as a 15-year mortgage. At freeandclear.com, we recommend that you pay off your mortgage as soon as possible so that you can start paying yourself instead of paying interest to a bank. Although most people select a 30-year mortgage term, consider choosing the shortest term that will also allow you to feel comfortable with your monthly mortgage payment. Additionally, one creative way to think about mortgage term is to get a mortgage with a 30-year term but make the same payment that you would with a 15-year mortgage, so a higher mortgage payment than what is required. That way, you maintain the flexibility of having a lower required monthly mortgage payment that goes along with a longer mortgage term in case you cannot afford to make the higher payment, but you can pay off your mortgage in 15 years and save hundreds of thousands of dollars in interest expense. We encourage you to watch related videos on freeandclear.com, such as what mortgage program is right for me and what size mortgage can I afford, and also check out the fixed rate mortgage calculator on freeandclear.com that enables you to evaluate mortgages with different terms. Thank you for reviewing What Length of Mortgage Should I Choose with freeandclear.com. freeandclear.com.